We want to ensure that every veteran across America, anybody who's eligible for their VA loan, can have access to the full scope of what the VA offers them as a home loan benefit.
Rental income when you vacate an existing house can count. This is an answer you will get differently from many different banks. So let's take her example. Client's coming here from Florida. They own a house in Florida right now. What are they going to do with that house in Florida? Sell it, rent it, that's their discretion. So let's say they choose to rent it out because it currently doesn't have a lot of value in it. Sounds pretty familiar, huh? They come to San Diego and say, can I buy a house? Yes. Can I buy a house and count my rent from my house in Florida? Yes. What do I need to do that? I need a lease and a canceled first month deposit check. So when you move out here, what are you going to do? You're going to put your house up for rent. Somebody's going to look and say, hey, I need a house 45, 60 days from now to rent because I got to give 30 days notice to my existing person. And you get those leases set up ahead of time. It's pretty simple. The timing actually works out rather well. We're probably a little unique. If a client tells me, hey, we're going to rent this place out, but we're not going to buy anything for 6 months, so I don't have that lease yet, that's normal. But just, hey, I know that your plan, we'll plan accordingly, and then as you get into the escrow process, that's when I'll need that lease. This is a big deal because FHA conventional, a lot of times they will not count a rent on a previous property unless it has certain equity or you're relocating or any of those other type of things. So this is one of those places, again, think about your database. This is also applicable for move-up buyers. Who here has move-up buyers? There's not many of them because usually a move-up buyer is selling their previous place, taking the equity out of it, and using it as a down payment on the new place. Who has equity in their old house? Not a lot of people. So a move-up buyer, let me give you an example. Let's say we have somebody who, when they were 25 years old, bought a condo in Mission Valley. 2-bedroom, 1-bath condo. He was 25 years old, superstar, bought it 10 years ago, and it was the greatest bachelor pad ever. 10 years have gone by. That person is now 35 years old. Kid number 3 is on the way. And the wife is looking at him going, we're going to end up divorced if we're going to have the 2 of us and the 3 kids in this 2-bedroom condo. We need out. So what do we do? Well, the condo, it's worth what? I bought it 10 years ago. It's in Mission Valley. Break even, maybe upside down a little. That's sort of an albatross around a lot of people's necks of how do I go buy another house because I got to deal with this one. If I short sell this one, it's going to kill my credit. I can't go buy a house. What am I supposed to do? Those people where it makes sense, hey, you know what? I'm going to go buy a 4-bedroom, 2-bath house out in suburbia, and I'm going to leave my 2-bedroom, 1-bath condo behind as a rental. Yes, that's fine. I don't care if they're 3 miles away from each other. You have a legitimate need for a larger house. You probably have gotten some pretty nice pay raises between the ages of 25 and 35. You can afford it, and yes, the rental income on that property will count. If the property's upside down, will it count? Yes. If the property's cash flowing negatively, will it count? Yes. If it's negatively cash flowing $2,000 a month, then it's going to start getting the sniff check of, okay, you're going to rent this out for a year, but are you really going to do this for the long term? Who's going to lose $2,000 a month for the next 10 years until your value comes back? You're going to let that go as a short sale. So that's where sometimes there's a little bit of a sniff check and things need to make sense.